Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Today I thought it would be more useful for taking a look at the Great British Pound, because on the gold market situation mostly stands according to our long-term scenario, and the daily updates that we are preparing through the week should be enough to cover the situation on the gold market. But on the Great British Pound, it's quite a different story, because pound right now stands in really doom and gloom situation. It's really very tricky background with this currency. Investors stand nervous, and if we'll take a look at the volatility of the Great British Pound, implied volatility, and position of the option market, you will see that investors are preparing for something. So if you would like to know more about this, you could read our weekly report, where I put the special article on this subject. Also, despite that long-term view on the Great British Pound remains bearish, and mostly it stands in relation to the driving factor of the Great British Pound, compared to all other currencies, the pound now actually is the one that mostly is driven by political events rather than some economical or fundamental background. And on the political sphere, as you know, although the Brexit agreement has been widely announced and some self-congratulatory relations stand on the market, in reality, investors start to suspect that something is wrong with it. Because what the core of this agreement that has been made, Great Britain stands in the economical space of the European Union, at least for 2 years. They continue to pay contributions to Brussels. They stand under the tax and custody law of the European Union, and they still have no economical border. So what the agreement has been made, I do not know. Maybe only the terms have been agreed whether final Brexit should take place. But all other questions that actually were the major questions have not been resolved. Still, on the technical background, we see that despite that Great Britain Pound stands mostly bearish, investors keep net short positions. Last week, this bearish pressure shown some relief. So some shorts have been covered. The hedgers also significantly reduced positions that had been oriented on the pound sterling weakness. So that could give some relief, and maybe a market could show some bounce. At the same time, we call you not treat this bounce as something really big and some major reversal. Currently, we are mostly watching for some pullback on the daily intraday charts, but not more. From the technical point of view, there are also a lot of pitfalls that really stands on the market, and that makes overall bullish setup really tricky and risky. But from the other side, it stands relatively simple, because mostly it depends on these lows, guys, that we have. On the daily chart and on the weekly chart, all this story stands against these lows. So while these lows holds, bullish setup has chance to be completed or to achieve some targets on the upward action. As soon as market will erase, taken out of these lows, the downward action probably will continue, because we already have warned you last week that we have the COP target on the weekly chart that stands at 125, and it has not been hit. And actually, we could get the butterfly pattern that is forming on the weekly chart. That could become the left wing of the butterfly, guys, and that actually could become the right wing of the butterfly. But within this wing, some minor pullback is possible. So also there is some background for these pullbacks exist, and we're trying to understand how it could be used. So first of all, as I said, lows, it's very important, and it makes overall situation relatively simple, because if you would like to trade Great British Pound on the long side, Your task is trying to take the position as closer to these lows as possible. So it means that you should catch some retracement here on next week, and it will be better if it will be accompanied by some bullish pattern. It will be just great. But just keep an eye on the possible retracement. So you need to take the position as close to the invalidation point as possible, just to minimize the risk. Because overall bullish situation, as I said, looks tricky. The same I could say on the daily chart. So yes, on the first glance, we have the daily oversold has been hit. That should support the market. We have the definite and clear regardless triple to buy pattern that has been completed. But what I do not like here, guys, is this collapse on the CD leg. So when you see that CD leg actually consists of just one candle, it's direct drop right to the deep D point, this makes overall pattern very weak. And very often this pattern fails, turns to the butterflies, or market just continues to some XLP target of the same ABCD pattern. But since we have here some kind of the oversold, this market also has hit the oversold, it gives us chances to count on some pullback. Also, guys, you'll take a look at the weekly chart, you will see that these lows actually are the lows of the bullish grabber on the weekly chart. So at least some background for a bullish scenario we have. On the 4-hour time frame chart, we see nothing special. Some starting of the upward action, and market is coming to very strong resistance. So as you can see, 129 area is two pivots, monthly and weekly, and strong confidence resistance on the 4-hour time frame chart. So that's definitely will be the barrier for the market. At the same time, on the hourly chart, market has completed minor XOP, starting retracement down, and since previous momentum is rather strong, here we could get maybe compounding two-leg retracement down, kind of the ABCD pattern, and this gives us two advantages. First of all, we will get the better price that is closer to invalidation point, right? So it's not really big risk for a Great British Pound if we're trying to take it in 618 support. Second, that could give us the pattern, so it could become regardless cheaper to buy here. That would let us to take the position. So something of that sort you should watch for if you intend to take the long position. For those of you guys who are watching for taking short position, currently it's not a good time for that. Mostly due to the patterns that I have talked about. So this is weekly bullish grabber. We at daily oversold. That's also not comfortable to sell at oversold. And overall sentiment analysis shows that investors have contracted a bit short position. So it means that they are preparing for some pullback, for pause in downward action or something of that sort. And if you have the bearish view, it's better for you to watch for some upward retracement, maybe some patterns, clear patterns will be formed. For example, it could be regardless cheaper to sell here, the kind of the ABCD action up. It's also it's possible. Maybe some other pattern will be formed. But currently, it's not time yet for taking the short position. So, guys, on the next week, we will mostly be watching for ability of the market to show something bullish. Although, as I said, the bullish scenario looks weak, but still we have some signs that probably retracement could start. And second, we will control these lows because that is final border for bulls, final outpost. And if market somehow, by some reason, will break these lows down and continue move lower, it means that we're coming lower. Next target is 125, but potentially it really could lead to major trend continuation because actually it's one here actually is also the long-term monthly and weekly major 618 support. Once market will break this support, it means that no real support levels will stand below it, and it will be relatively free space on the monthly and weekly chart. That's why these lows are very important.